let's start with the most widely used and most popular forex pair of them all, and which is euro against dollar. Well, as you know, United States is the world's largest economy and Eurozone is second world's largest economy, and they both have largest trading relationships of them all. And naturally what that means is that over 25% of all forex markets are traded with euro against dollar currency pair, and the means of that is endless, everything from tourism to financial transactions to international trade, because if you want to sell those Mercedes-Benz and BMWs to from Europe to America, you have to convert currency in order to receive your proceeds from dollars to euro, and vice versa. If you want to nowadays buy natural gas from the United States to Europe, you have to convert your euros to dollars and buy that gas. So, and of course in financial markets there are endless transactions of foreign exchange swaps, carry trades, bond purchases, stock purchases, and many other things, which says that you could be like billionaire and still trade forex in the way that actually foreign exchange markets wouldn't make a thing. So that's for your long-term dreams. If you are trading forex now and want to get filthy rich by forex, rest assured you wouldn't be too large for any of these markets, because you could trade billions of dollars per trade and they would feel a thing. But with that said, let's see purely from traders' perspective how euro against dollar will look. And here's one context. Euro came into reality I think in 1998 or 1999, so it's pretty young currency, but they are basing euro on Deutschmark. Now I wouldn't go into fundamentals of euro because it will be different topic, and I certainly will make it purely for fundamental reasons. What's the nature of euro, what's the nature of dollar, and so forth. Now of course I'm making trading videos and I will look at euro against dollar purely from perspective as a speculative trader. So long-term fundamentals and structure of economies will be for a different day. And let's start with the 70s, where we could see that currencies made spectacular rises. Now if you have looked at my previous videos for stocks or commodities, you would see that here that increase might not seem that large, but bear in mind that leverage in foreign exchange are much higher than in any other market. So these increases are actually pretty substantial. Now of course in the 70s you couldn't trade nearly as well as you can now, but still here you could see that for those who traded, profit opportunities were there. So you could see there were several, one long-term trade, second trade, third trade. So we continued to move in large moves from 70s to late 80s without any. There were some range markets, but for traders it's very difficult to not trade on them because they were still large moves. Anyways, we could still see that from late 80s it's still euro climbed against dollar. I think there was plus agreement in this time made, which made dollar significantly lower. So with that trend we see that dollar slowly moved higher up until 1995, but with still relatively good downtrends as well. So these were endless moves for traders. You see, nothing stayed flat like it was in commodities or stocks, but there were waves. All those moves are profit opportunities for traders, and they didn't actually stand flat. And when it actually peaked in 1995, it fell pretty consistently till 2021, and then Fed started tightening their loosening its monetary policy, and dollar went to its lowest against euro just before crisis of 2009. So this all were rather consistent trends for traders, except for this move for some time, but you cannot have trades all the time. And then when financial crisis hit, there was money making opportunities for traders here, and then quantitative easing started, dollar fell, and then Eurozone debt crisis went along and euro fell. So it kind of mixed between Eurozone debt crisis at late 2000. Excuse me, here is Eurozone debt crisis. So here we went to various rounds of monetary easing between central banks. So there were nice moves for euro and dollar here, and then after that euro rise again and started to collapse in these times. I remember these years very well. Then people were saying that Greece was on the verge of bankruptcy, and there were Eurozone debt crisis with Eurozone conferences every week at that autumn, because I then started rather seriously focus on that. And I remember this time when Draghi said he will do whatever it takes to save euro, and euro rised, and then dollar was very strong at 2014, became very strong, and yes, they separated their monetary policies, and yes, went to these levels, and actually from here nothing much has changed. So those large trends kind of slowed if we compare to previous times, and here we are at those flat markets with nothing interesting, because all of the central banks are making easing monetary policies, and there is that once monetary policies are identical, then trends are not that great as it were before when they are making opposing ones. But still, there is a couple of interesting moves in the last years, because due to the fact that Fed started to tighten their monetary policies first, and there were doubts of recession due to the war of Ukraine, euro started to fall. But this here's long-term contrast, which clearly showed us there are some historically phenomenal money-making opportunities in trading with euro against dollar. But let's see how does it look for the last couple of years if you realistically traded it. Let's start with something good. I will give you context, and here is markets from 2006 to 2008. One group uptrend from here to here, then a couple of downtrends in midst of financial crisis, and then when markets recovered you could get one uptrend and one downtrend. Then still here a couple of mediocre trends here, but still good ones in early 2020 to mid 2020, then to late 2011, and then to 2012, not 2020. 2020 was 2 years ago, not 10 years ago, with a couple of range markets. And then when dollar raised against other currencies and commodities, and other weaker pairs fell, and then there was good money making opportunities for shorting euro against dollar. And then a couple of shorter trends in next years, like here, and of course here. So not that bad actually. I thought it will be worse for daily trends because nothing happened here, but still you could make some money with these mediocre trends if you just traded them with low leverage and knew how that risk, because trends in currency markets by their nature are much smoother than they are on commodities, because there are no shortages and spikes. It's good and bad thing at the same time, but it's more question how you could separate it. So, and let's look at euro against dollar in past couple of years. I'm not fan of euro against dollar, to be honest. I'm too poor for too poor for to allow me pure trading view, full trading view. Bad, but nothing. Nevertheless, let's see. They start to trade at midst of COVID. One good uptrend, two good uptrends, three good uptrends, one break-even downtrend, and then 21, 1, 2, 3, 4 good downtrends. Actually, it's not that bad for euro against dollar. And then 4 uptrends, 5 uptrends, downtrends, 6 downtrends, 7, 8 downtrends, and 1 small uptrend here as well. So not that bad. Actually, I thought it would be a bit worse, but yes, you could still trade euro against dollar in these days. So you could see that nature of trends are much smoother, as I told you in previous videos, and certainly there is money making opportunities, but here it won't be as much as magnitude of trends as it is in commodities, but in your ability to execute money management well. It's important everywhere, but in currencies that's the name of the game, because you simply cannot wait for something to rise 3 times its value. And let's look how other markets will perform in similar fashion in next video. So make sure you're following me